Hey guys, how are you? Welcome to the ARMR Report. I'm your host, Brett Rosenthal. Hope there's no technical difficulties today. I hope you can see what I'm saying. If not, I'll repost on Twitter with a new landing page. All right, let's get to it real quick. This is the ARMR Report. I'm your host, Brett Rosenthal. This is about stock market investing in what I call the millennial age. We're using traditional fundamental analysis, but we're using algorithms that we've designed to manage our own capital and that of other high net worth investors. All of our businesses run through Interactive Brokers and our affiliation with them. This morning meeting is designed to help you get your mind right and get ready to either trade or invest. We're going to cover both aspects. I'm going to try to make this brief, make it quick. We have to get to our trading desk and get ready for the day. This is a live desk. I'll be using this information I'm sharing with you to make decisions in my own portfolio. Step one, always get yourself on the right side of probabilities and statistics before you enter a trade. Make sure you're on the right side of probability and statistics. And then check to make sure the reward, if you're right, is worth the risk you're taking. If what you're expecting to make is not at least 3 to 5 times more than what you're willing to lose, then you really shouldn't be day trading. You need to be looking for the big moves versus the risk you're willing to take with the tight stops. Okay? So without further ado, talked to you yesterday about the gap up morning, and I made it clear, the gap down morning. I made it clear that if the right setup occurred, I'd be getting long. I like to get long gap downs. That did not happen. And I tweeted that out to you, let you know. No triggers to get long. So what that meant to us, if you can't get long on a gap down day, then you look for your short opportunity, which we had at around 10:30. A retest of the VWAP on all the indexes. So we gapped down, sold off hard, bounced. There was no volume on that rally, which told us that was the opportunity to get short at the VWAP or a little bit above. We were shorting the Dow and the small caps. So they went a little bit above their VWAP. That was perfect. Let us put shorts out 1 standard deviation above the VWAP. Then the market cratered and had a good day trading. But we also have been stalking the bear from an investment standpoint. We're not just looking to day trade. And so we're looking to lay in short positions up here right at the downtrend. And yesterday's action was definitely a paw print. It's the first time in the last 13 days where you get this big gap up and then, or I should say a big gap down and then lower prices all day. That's the kind of thing that happened in October, and November, and December. It's the first time it's happened in January. Now, one sell-off day does not mean that the sell-off that we saw in the last 3 months of last year is going to continue in January. I don't know what's going to happen today. We can't preconceive what's supposed to happen. That was just one paw print. What we need to have now is follow through the downside so that we'll be able to say, yep, the downtrend held, the market tried to break out and failed, it's back below the 50-day moving average, it's heading lower, and we'll be aggressively short from these prices. Caveat, we're gapping up today. Beware the gap and go. One down day doesn't mean anything. It could be a great opportunity to buy the market. So the market went above the 50-day moving average, sold off yesterday to test it, gapping up today. Gapping up about, well, 0.75% on the Dow because IBM had a good earnings announcement. Haven't seen that in years. Stock's up 7%. But the rest of the market's up around 0.33%, okay, at the open. So that's a gap up. If we get a gap up on volume and we take out the high of that volume bar to the upside, we need to get long for a gap and go trade. If that trade fails, we reverse, right? We'll reverse. If it gaps, tries to go and fails, then we'll be adding to our investment short. So we could be doing two things on the desk today. Gap and go, we're going to be looking long on the intraday basis. If it fails, we'll be looking to build our short positions for multi-day investment purposes. That's how we'll be day trading today. Now, if it just gaps and immediately sells off, not much to do. I'll be looking for reasons to trade, but I'm not sure which way I'll be going. I don't day trade every day. Just because it's called day trading doesn't mean I trade every day. I'm looking to hit my pitch. It's either exactly what I want or I don't day trade, and I focus on my investment processes. I focus on getting on conference calls, earnings announcements, listening to management teams, doing research, building investment processes. Okay? Which we do really every day. Some days, though, we're aggressive on the trading desk trading, and so that takes precedent. All right, so I just want to let you guys know what we're looking at. If we get a gap and go, we're looking long intraday. If we get a gap and fail, we're looking to layer in investment shorts if it behaves correctly over the day. I'll talk to you at 12 o'clock, our regular session, for a longer discussion. Maybe I'll share some screens and we'll go over what's happening. I wish you all the best of luck today. Be safe out there, and thanks for listening.